Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another daily cryptocurrency market update. It is the 1st of March, a new month, and we've seen quite a strong daily candle to kick things off. We also closed the monthly candle in green, which is good to see, even though it was ever so slight. This is typically what you would call a doji. It shows a real indecision. And February's been a month of rethinking, people having to reprice and markets looking to reprice higher implied interest rates due to sticky inflation. And this is what we're going to be talking about as well. We're going to be looking at March as a performing month. Typically March, if you look at the past 53 years for markets, has given you an average of 1%. So March is typically not a bad month at all. Of course, September being the worst one, November being the best month traditionally for the S&P, so the equity market. Let's see if March gives us a green month. And this is a situation that we've accounted for. You know, you guys will know, certainly if you follow the channel daily and you're staying up to date, that we essentially believe that you have a reverse head and shoulders, which is a brilliant reversal structure that on a time frame like this has been going on for nearly 10 months now, could give you a really strong reversal technical pattern based on all the other fundamental and also technical reasons that we gave at the start of the year for sort of re-entering the market, having been out of it for so long. So this is what we're looking for, and actually we're trying to price in where's this right shoulder coming to. You know, there's levels we don't want it running, like your 0.362. You also don't want to run this left shoulder because it kind of throws this pattern out the windows. So there is still the scope for further downside. We are not expecting that, and actually that would be an opportunity. But we also have to be wary that, you know, you have interacted with this level, and ultimately, if you come up and break this neckline, hold it, you are going to be back in the 30K zone before long at all. And yesterday, we actually looked at Mike Wilson's comments from Morgan Stanley, and he was talking about the death zone and comparing markets, certainly the S&P where it currently is, to the kind of death zone on Mount Everest, and saying that you're at this kind of high altitude point where often people die. And I kind of said, well, look, people either die or they make it to the top and then they can come down and reap glory forevermore, saying that they managed to successfully climb Everest. So this is the kind of, you're between a rock and a hard place, I think. And the stock market has had a pretty brutal time. You can see this started with February. We've looked at rates, terminal rates, and what they're looking to be priced in at. And there's been a repricing in the equity market. And Bitcoin just simply couldn't, even though it tried, break free from that. You can see it sold off in accordance with markets, then got this real impulse, and then kind of came back down. And there is a divergence, a significant divergence here. We're just waiting for a reset of this. We're also waiting for dollar weakness, which is going to kind of help us confirm when our right shoulder has formed. Interesting, because the dollar, we did give the call on the rising wedge for the dollar, but this didn't look great. And you've essentially retested this support now flip resistance once and twice, which gives me kind of confluence that actually maybe this will play out. Very typical of falling wedges, and remember this, guys, that they come in a 3 impulsive fashion. And actually what you'll find is often you'll exhaust buyers with a pop out the top. It also wrecks shorts, takes liquidity from both sides of the markets. And this is a very common structure. So we're also watching the dollar. We're also watching, probably more importantly than anything, the 2-year yields for the US, because this is how interest rates are getting priced in and how markets are pricing in interest rates. And ultimately, we want this to top and roll over, and that's going to give markets a brighter future, blue skies ahead, because it's going to mean the Fed isn't going to be more aggressive, and maybe markets have got things right. We do have a div on here. If you're on the weekly, you know, this move is somewhat running out of momentum in the same way that this one did, but we will see. So these are all things to watch. You know, how's March going to shape up? Well, we've got the targets that we're looking for based on the fib levels. We're going to be watching this and looking to take action depending on where we come down to. Ultimately, in the expectation that this market sees further continuation. And if you do get this structure play out, this is going to be a structure that's going to invoke confidence, that we're going to see that continuation to the upside. And I at this point, I'm very much on the bull side. And not the bear side until this structure gets invalidated. We made a pretty serious decision at the start of the year to put money back in after being out for literally the majority of 2022, which was the right decision. And, we're largely still sticking by it. If you want to find out more about that, what I'm buying, where I'm buying, feel free to join the Patreon. There's a link in the description. It's the start of the month. Great time to join. It's the price of another kind of TV subscription or something like that. And I can guarantee you're going to get more value out of it. How does March typically perform? This is a table of the S&P's monthly returns from the 1970s to 2023. And you can see that actually typically March is not a bad month, followed up by April, which is a decent month. And then you go into a kind of lackluster May, June, and August. So is this going to follow through and play out potentially? Well, you've got to watch the dollar. You got to watch the stock market, of course, which is what this is looking to play out on. And then ultimately this is going to translate into crypto. And that could give confluence that actually maybe you've already formed your right shoulder and you're not going to come and visit the 0618 or potentially the 05. So this is interesting stuff. Now, one reason we looked at Mike Wilson's comments yesterday was because even though I'm on the bull mind nowadays, or towards crypto right now, there is still a very bleak macro outlook looming, and actually yesterday we had rising inflation in France. I think they hit a record, and Spain's also very much reasserting. We're also getting news in the UK that inflation's really ramping up again. And this is kind of very much on par with what we've seen in February, with rates getting, deemed to be coming in a lot hotter. And ultimately, this is bad because it means the Fed has to stay tighter for longer. And what we want is a looser Fed, a more lapsy-daisy Fed that's going to actually allow pump liquidity into the markets. But they're also on this tightrope where they can't be, I don't think, much tougher than they already are. If I'm being honest, I think they're going to end up completely imploding something. And you're seeing the housing market really take a hit right now. If you look on Zoopla, I think they're asking for nearly 5% under the mark price, which is pretty interesting. UK houses priced post sharpest annual fall for a decade. This is astounding. February saw a 0.5 month-on-month fall, with prices now 3.7% lower than their August 2020 peak. And this is the effect. This is set to continue, which is going to have a dampening. It is a bleak macro. Whilst you've got rates this high, the macro sucks. But I can't help but feel like our tiny $1 trillion industry is going to climb a wall of worry and start to look for that upside. Because there's this kind of value with crypto that other markets simply don't have. We've seen a lot of the leverage get taken out thus far. When you're talking about spot crypto, and we're all spot at the moment, we're not really trading the derivatives market and leveraging at the moment, because you're in this kind of takeoff period, I think. Once we're cruising and we've got a direction, then we can start playing around with that. But ultimately, I think there's a value that the cryptocurrency market has, certainly with this regulatory, forthcoming of regulatory clarity, which is literally going to propel this space from 1 trillion, if it's still there when you get the regulatory clarity, I doubt it will be, into the tens of trillions. And that's why I'm happy to be a long-term investor where I got in until proven otherwise. Always keep dry powder for lower prices. But ultimately, we've made a smashing decision thus far, and you could be right there when we're making these decisions also. So it is still a bleak macro. There are positive signs. We are still getting positive-ish data. Hong Kong stocks jumped 4%. This is as factory levels go back to 2012. So this is interesting. This is going to potentially have a downward draft on inflation. And also, China's been a huge form of liquidity since the start of the year because they were essentially shut down for nearly 3 years and reopened. Interesting news, Samsung is working out a roadmap for mixed reality devices as rumors of an Apple headset swirl. The metaverse is coming, ladies and gentlemen. Wormhole counter exploit forces scrutiny of multi-sig and DeFi. So MakerDAO essentially retrieved funds from Jump Capital that lost their funds to the Wormhole hacker that put them on MakerDAO. And MakerDAO went to a court and said, listen, let's use the multi-sig to get these funds back, and basically deny that guy's permission to, even though he was a hacker and a scumbag, to basically take the money from this individual. And it really calls into question, well, if they can do that, kind of takes out one of the pillars of decentralization. Ethereum also steps towards staking withdrawal with a successful testnet, Cipollina or something, I think it was called, which of course is the precursor to their Shanghai, which will be when you will essentially be able to unlock your Ethereum for the first time in a long time. Digital pound could protect consumers in bank runs, BEO says. Isn't that interesting how they're talking about bank runs? Well, this is the tricky thing with where the Fed's at, because if they over tighten, they may as well have just let inflation run, because what you'll have is debt defaults. Once debt starts to default on a mass scale, currency itself gets called into question, because that's all currency is an IOU essentially. And then this is how you end up in this bank run situation. So we'll see. I think actually a lot of what's going on right now could be all to usher in CBDCs. We know blockchain's revolutionizing all industries, not just finance, but finance is one that it very much suits. And the revolutionary part is the blockchain part. People are trying to reinvent finance when all you need to do is apply blockchain to it, and it reinvents itself. So that's all I've got for you guys. This is what we're watching. We're just observers of the market right now. We have a position. We don't need to worry about that. And ultimately, it's just a case of watching and seeing what we get moving forwards, and looking at data, looking at inflation, looking at implied rates, and looking to see what levels we interact with, and what kind of opportunities we can pick up during this right shoulder being formed. And the right shoulder could indeed be in, but it's a tricky one because you'll get confirmation of that back at the 25K, or we could look for that downside. And remember, this month, we've got the Fed rate hike on the 22nd, and I think on the 13th, we've got the CPI. All going to be very interesting and certainly market moving. Again, if you get a lower CPI than the prior, it's going to boost markets. If you get a higher one, it's going to put a little bit of take a little bit of wind out of their sails. And along with the rate decision, I think 25 helps markets. I think a 50, will kind of go, oh shit, Anyway, all I've got for you in this video, guys. You enjoyed the content, like as always, appreciate it as a comment, and I'll catch you all in the next YouTube video. Thanks a lot for watching, ladies and gentlemen. See you in the next one.